The hedgeless horseman here. It's July 10th, 2025. First of all, thanks to the sponsors. Uh, Look at the market. Oh, silver is apparently ripping. Copper is back to ripping around new all-time highs thanks to the tariffs from uh, uh, Trump. So it broke through $5, and right now it's still actually over $5. But it's nice to see, silver get going, and you're gonna probably, if that keeps going, you're probably gonna see a lot of hype around, silver juniors, etc. Uh, there's a few companies with news out, but I thought I'd probably just focus on First Nordic in this video, as probably quite a few are aware. They announced a best effort uh, best efforts life offering of units for $10 million, and that was set at 37 cents. I think it closed at 41 cents yesterday. So what is it, 10% discount or something to open market price, so it sold off. And I sure can understand the frustration, especially since I probably have more shares than most people, including a lot of family members and friends and all that. So I have very high exposure to First Nordic, simply because I think it's the most undervalued gold junior that I currently know of, or I mean, might be tied with one or two others, but it's the still the largest uh, public, I mean, I have a that's not gold junior actually. I'm thinking about a private company. So no, it is the largest gold junior exposure I have. Uh, and of course, the what's been frustrating with First Nordic in a sense. I mean, the funny thing of course is that, okay, how do you find something that's very undervalued? I mean, there's got to be something frustrating about it, of course. I mean, look at any whatever success story or what have you. The best returns are always from the lows, as we know, and they tend to come, or the big returns tend to come if you buy something that's very undervalued. But there's always a narrative or reasoning, let's say, behind Mr. Market. I mean, sometimes it's just a story that's been simply boring as hell, and then all of a sudden, fast forward. I mean, might be more like micro cap examples, where it's like nothing has changed for the assets. The company's not drilling or have any news out, but the project is good. All of a sudden, they raise money and they get to work, and down the road it's up 500-600%, and you're scratching your head. It's like, oh man, this was trading at 5 cents or whatever 6 months ago, and now it's up at 50 cents, and it's like, what happened, etc. And then you start to wish you would have gone back and bought when it was super boring, nobody cared about a story, etc. But it's always easy in hindsight. The reason why most people do not easily buy that low, and including myself, is because you don't see anything to be whatever excited about. So they go hand in hand. I mean, if you're gonna find something that you think is undervalued and is a potential buying opportunity, it has to obviously be undervalued for whatever reasons. I mean, if you can figure out the reasons, that's even better, because then you know why the market is making it cheap, mostly on, let's say, psychological reasons. I mean, in this case right now, First Nordic, for example, I mean, as you probably know, gold did well up until, what was it, April, and then kind of gone sideways. Uh, First Nordic participated for a while, and then you see, a clear downtrend ensued, and it dislocated from the price of gold. It dislocated from the news releases. that they're de-risking more targets, that there's encouraging signs out of the IDA drilling visuals with VG, etc. It didn't affect the share price at all. The trend was intact. And some's like, yeah, it's trading like there's gonna be a placement. And it's like, yeah, I mean, it looked like it was trading like there was gonna be a placement because there was just, an endless amount, in a sense, of shares for sale. Didn't matter if gold was up, really. Didn't matter what the news was. And I'm sitting there, banging my head into a wall almost, because it should not be legal for the market to have anything trading this cheap based on the underlying assets. So, I wasn't expecting a placement today. So the ones who thought the next, let's say, material news release would be a placement, they ended up being correct. But the thing is, like, when you think about it, because I know there's a lot. I mean, some people are very unhappy, frustrated, etc. Of course, because the idea is, if we're talking from an emotional human perspective, so the last few months, I mean, nobody cares about the run-ups anymore. You know how it usually is. And if any correction, even in the short term, that gets people very frustrated. Nobody cares that, since inception, I mean, the forming of the company, the stock has done well, etc., etc. Now we're focusing obviously on the recent pain, etc., more so than actually a lot of time what the opportunity might be. But okay, if put yourself, let's say, in management's shoes, if there is in fact, which it appears that was the case, you have whoever, the powers that be, I was going to say, they're expecting a placement. I mean, obviously it's 100% guaranteed that First Nordic was going to need to raise, because it's a non-revenue generating junior. The question is, timing, etc. But of course, the more time goes on, the more money gets spent, the closer you are to our financing. That's absolutely inevitable. Every day there's, whatever, salaries to be paid, drilling is ongoing, yada yada, so it gets closer to needing to raise cash again. And some thought that's like, well, if, are they already out of money? I thought they had money to, drill 25,000 meters, etc., etc. I was like, the trick is, I mean, I think they have technically the money to, complete the 25,000 meters, because I think they should have $6-7 million left in the bank. But the thing is, of course, that, well, I'm not going to say of course, but the thing is, if you end up spending the budget without raising, you have the money, so you can complete what you set up to do. You have the money to complete what you set up to do. The problem is, of course, what happens afterwards. I mean, I think Goliath is probably one of the best examples in recent times. What happens when the market believes that the next material news release is going to be a financing. So, where do we have? This was Goliath's, I think, last drill result, announced 27th February 2025. Almost 10 meters gram per ton AU equivalent, over 10 meters, update models with new 4 gold veins for a total of 12 stretching vertically, blah blah blah. Barn burner drill result. I don't know how many other they have. I mean, I don't know if this is I don't remember, this news release. But it's like good stuff. Yeah, one hole cuts a bunch of I mean, it's a good holes after the best drill campaign the company's ever had. What happened afterwards? When was this? February 27th. Yeah, 27th. So, I mean, this is where it closed on the 26th. this is what happened after they put out the last news release. That was a dip of 36. I think it went down 40 from the top 54. On what? Based on what? Did the intrinsic value of the company get cut in half on the last assay result? Of course it didn't. But that's not the point. The point is that they, in order to keep drilling this magnificent gold system, they need money. They need to raise more money. So if you want to get a big piece, if you want to flip some warrant or have warrants, and obviously you would prefer to have the warrants as low as possible. So even more so, if you like the story, you would want the price to be as low as possible in the coming placement. If you got big bucks to spend or big bucks to put it in, if they do a big raise, I don't remember how much they raised, but yes, last time they did a big raise, so we're talking a pretty big sum of money. If you could get a 40% discount versus the current trading price, if you have 5 million to put in and you get a warrant, especially the better the case is, the cheap. You always want it the cheapest possible, but the better the case, the cheaper you want to get in, right? I mean, would you like to put in 5 million here or 5 million down here? Especially if you think it's a super good story. If you could choose, obviously you would expect to make a lot more money down here than up here. And if we go back to First Nordic, for example, this is what happened going into the last 10 million placement. It's like it wasn't able to go over this line here. So around what is that, like 37 cents or something? It's just there was, it popped up a bit above here, but here, for example, I think this was a huge volume day. So it's like, okay, there was, for all intents and purposes, because there's so little capital in this sector to actually keep the market honest. I mean, there's not enough, let's say, retail buying and all that in the open market, that if you're an institution and whatever, you especially if, I'm not saying that's what happened in First Nordic, but we've seen and we've heard a lot of stories where there are entities who short something and then bring a stock down and then they cover in the placement, and maybe they get warrants, for example. I mean, it's like almost a perfect crime. If you have more ammo, or if you can short more than there's buying power, you can force the price down, and then you can get out by participating in a placement and covering. I mean, you made money on the short, you get a lower entry price on the long, and you might get warrants. So I mean, I'm not saying that, I'm not accusing anyone of doing that right now, but it's like that is obviously going on in this sector, for example. So one thing here, for example, you have this lid, basically. It's like it just, quote, wasn't allowed. There's nothing magical about 37 cents. It's not like that's the exact intrinsic value of First Nordic. That's absolutely 100% bullshit. Of course it is bullshit. But, so it wasn't able, so there was a lid, there was enough selling to keep it down. 10 million bought deal gets announced at, I don't remember what the discount was. So it opened up lower, traded lower for a while, and then they closed oversubscribed bought deal, that marked the bottom, and then it's like rocket ship. So what actually changed for the story between here, between there, and between there? I mean, not an insane amount, I would say. Yes, there was obviously encouraging exploration in news, they find new anomalies and all that, but it's like nothing that most retail or the market typically cares too much about. So you can't really explain this kind of behavior from a rational way unless you account for the fact that, okay, well, if you want to get into a placement, you think you can get into a placement, you think you can get in with whatever it is, you think there might be some warrants, even half warrants, you like the story, obviously you would want to get in as low as possible. So I mean, if you're going to participate with, let's say you think about participating with $2 million worth of stock, you could theoretically be a seller for $2 million worth of stock, because you're going to get to buy it back at a lower price with a warrant. So the selling, let's say profit taking, it gets it capped, it gets sold off, you buy back your long at a lower price, and let's say with a half warrant. I don't remember if there was full warrant or half warrant. Anyway, yes, I can understand why that would be attractive. So in the recent case, for example, which we've seen, first I'm just adding gold price here to make so here, for example, I mean, around the formation, I think it was around here. Okay, follow gold price. Now, okay, went up more than the gold price. I don't remember if there was something special that coincided with this. Anyway, gold price kept on going up, 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 up. So in one sense, one can say that, okay, the gold price backfilled, if you assume nothing changed for the story. But if you just look, I mean, comparatively, so here gold price is going up, First Nordic is going absolute sideways, and here's gold tops. That's when they announced the placement. So I mean, that's good timing. Even though, yes, obviously one would have wished the gold price to be higher, but they did actually, literally, announce a financing when gold sentiment was probably the highest in the last 11 months. So that's actually, I mean, in hindsight, incredible timing if they want, the most appetite for the placement at least. So they raised when gold made a top. Sells off on that, obviously, because some might, still sell in the open market if they get some kind of warrant, especially if, and depending on how much they how much value they put on the warrant. It was like almost as soon as that closed, boom, First Nordic began to run, and this was, I mean, from the bottom here, that was like a 123% run. So can't go up here. Financing discount, boom, rocket ship. And I would say, I don't think the value of the company changed this much. And in the grand scheme of things, it's like, how every junior needs to dilute. So it's like the fact that a junior needs to dilute should be reflected in the market at all times, of course, because it's not a black swan event that a junior that's using cash to create value, it needs to have financing. Okay, so then it ran with the gold price. I mean, some would say, okay, it ran too hot. I mean, I don't think this was overvalued at all. But you have a bunch of people that are sitting on profits from lower levels, so this is obviously a great return in such a. I mean, it's like 2 months and you're up 123%. Obviously, that's a lot of people are probably going to take profits, and it looks like it kind of got vertical. So okay, profit taking ensues. Let's say not, super material news gets put out either. The trend starts to go down, which sours the sentiment. Most people want to buy in an uptrend, not buy in a downtrend. And then here, gold starts to go up again. And basically, I mean, I guess it kind of, somewhat almost peaked around here. Then traded sideways. So First Nordic kept trading down. So it dislocated in the sense that gold kept going higher and then sideways. First Nordic kept going lower, despite the fact that they're finding even more large-scale targets, etc. I mean, I think again they have one of the best 100% owned exploration portfolios in the space. Yet didn't matter. News didn't matter. Gold price didn't matter. There was just somebody just was okay selling it when gold was at record highs, when gold kept being around record highs, if there was good news out, etc., etc., which feels very artificial, of course. And of course, that reminds one of this, where at least I guess was able to trade sideways. Here they actually it was able to dislocate completely from the gold price and news price. So then the problem becomes, you're the management team. You're seeing this. It's like somebody's just sitting on the stock. No doubt, I would think that some of that selling, or a lot of it perhaps, is people who think, okay, we can get into a private placement. In that case, we can buy back in bulk, and if you sell from here down to whatever, well, now technically here I guess, but if you sell from here down to here, okay, your profit taking or whatever you might be doing, so you get an average of this paid, and then, which is, I mean, not always, but typically there's some kind of discount to the market price, especially if you're raising a larger sum of money, because you need to attract more people willing to take a bet. So you get a discount. So everything here that you sold, you could buy back in a placement. And I'm not gonna, point fingers to anyone specific, but it's like, who might be doing this. But let's just say it's the market. So then the problem is, okay, if you're sitting there with, you get a bunch of assays coming in, you're seeing this, that okay, there's just too much selling because there's anticipation of a placement, and of course the placement gets one day closer every day the company or every day that passes, because you're burning money every day. So it's going to be an increasing quote problem, because it's going to be more, every day that passes is one day closer to the next financing. So the question is, do you want to be in Goliath's situation, where even if you have good results, since you don't have the money to continue that, and the market knows, plus seasonality in the case of Goliath, so you're looking at seasonality plus placement. That's why I think, I mean, those two factors combined is why I think it got absolutely crushed. Does that have anything to do with the actual fundamentals? No, the fundamentals, the last news release couldn't possibly change in long-term intrinsic value of Goliath by 50%. And plus it was a good result. But that's how markets work, and especially when you account for, let's say, placements and all that. I don't operate like this, so it just pisses me off, basically. But that's what happens. So I mean, if we go by the last pattern, a financing is announced, boom, stock goes down, trades down here for a while, placement closes, and then, like some miracle, all of a sudden there's not that much problem for the stock to go higher. All of a sudden, all that selling, that's somebody has had to, sell the stock at whatever price, all of a sudden they're not there. And I mean, we've seen algos at work, for example, in the first Nordic. Morgan Stanley's been selling like 500 shares now and then at like 2-minute increments and stuff, and then they're away for a while, get back in. Obviously, if you're spoon feeding constant sell orders into the market, it's not because you want the price to go up. It's just, it's like you have a wet algo with a wet blanket. Almost every, most of the ticks become down ticks in that case. So yeah, I mean, if history repeats, I mean, it's much cheaper here than here, because we know a lot more of the system, plus we're waiting for whatever 40 plus assays. So if history repeats, this might be as low as anybody's. I mean, personally, it's like I cannot fathom if First Nordic ever trades at these levels again. But anyway, like that. I'm not saying that's absolutely going to happen. I'm saying it absolutely should happen because this is so cheap. It's absolutely ridiculous. And more so is that, okay, if they raise 10 million, let's say they have 50 million in the bank. Once these coming assets come out, if they're good, there's not gonna be any immediate like front running of another placement because they just cashed up in that case. So I mean, in a sense, if you want to give your results the best runway, you should raise before you put out results. But at the same time, yes, at face value, if I saw, let's say, any random junior that I didn't really know that well, long time to get assays out, and then you see a placement before the assays are out, I would assume it's like, oh my god, the assays are gonna be, crap. But in this case, there's some context. Taj, CEO, bought 225,000 shares worth of shares at 39 cents, I think, a week ago. That's not a small buy. That's not a small addition. That's not a small doubling down. And I would assume he knew what the PP terms or placement terms were gonna be, for example. So he willingly took a worse deal in a sense in the open market. I think, in my opinion, I think that's, I mean, good, obviously signal value that he's like foregoing. I mean, you see some juniors where the insiders they sell in the market and then they do a fat placement at much lower level with a full warrant and they buy it all back. That's not that's not super nice to see. So in this case, he's kind of burning the potential of the money he put in a sense because he chose to put 225k in the open market without getting any warrants at a higher price than the placement price. So I mean, for me, kudos to him. That's saying something, and of course it says that he thinks this is just ridiculously cheap, and because I don't think he likes pissing away 225k. And also we know that there been instances of VG. Doesn't mean there's going to be any bonanza type grades. Typically, I mean, there's a lot of, I think, VG at Barsele, but that doesn't mean that, yes, they've had bonanza hits, but it typically doesn't mean that it's super high grade. But it at least shows that there's gold there, right? And they hit it, I think, 1.5 kilometers apart. So, and see alteration that they like in some of the drill holes. I don't know how many, but there were core photos where you have this dark Svartliden type alteration, which typically holds the. That's how the ore looks in the Svartliden deposit. So, am I expecting 100% dusters? I mean, that's how you would read it if you saw the chart, and if you also, exactly, saw the chart. There's absolutely no excitement from the baked into the chart. But again, I think that's simply because of front running on this placement. I mean, again, if you looked at Goliath, okay, apparently the sky was falling after the last good results. That's obviously not true in the slightest, and now it's back up. So it just goes to show. That's partly why I think a lot of people dislike this sector. Anyway, so if you want to give your coming results the best runway, if you want to, because let's face it, let's say they put out results. Let's say they have some good results. I mean, I don't expect every single hole to hit economic grades because they have done very aggressive step outs. That would be crazy if they hit on every hole. But let's say they're good results. But let's say it's not like 50 meters of 5 grams per ton, like absolute insane barn burner returns. Who knows? Maybe there would be enough selling to front running the next placement, especially if they like the results, of course. So you're kind of gambling in a sense that the market is going to be rational enough, or there's going to be enough buying power to go through people, let's say, who are just selling because they want to get into the next placement. It's like when you see some juniors with really messed up share structures, where it's like, I mean, it's like 50 million warrants or 100 million warrants or whatever. It's like it takes so much to get through, especially if they don't have good access to capital. Because if you don't have a lot of access to capital, you can't do a lot of work. If you can't do a lot of work, it's harder to surprise to the upside, right? I mean, it's easier to create a lot of value with 20,000 meters drilling than 2,000 meters drilling. That's just how it is. So when you see some of those stories, like they put out good news, the stock doesn't go up. There's too many warrants. There's not enough buying, even though it should go up because the value went up. And then you have super tightly held share structures with almost no warrant overhang. They have no problem going up and even getting overvalued in some cases. I'm not going to mention names, but I think there are a few that are, really tightly held and they actually got overvalued. So much easier time to bring it up because so little buying is required if nobody's really selling. But if you want to give your assays or the driller cells the best runway, you don't want anybody to have an easy time getting in a sense. That's why I think, for example, Rackley is doing so well, because they're cashed up, 10 million in the bank. They're going to be able to finish everything they're doing. And of course, after that, yes, they're going to be needing to raise money if they want to expand it, but still, they still have 5 million, so there might not be as much that they need to raise compared to if they didn't have 5 million. So, I mean, if things go well, let's say here, we might be in for a case where, okay, First Nordic is resetting, clearing out all this front running of a PP overhang, all the front running of a placement, like here where it just couldn't go up because somebody has kept selling into it. So if you clear that away, people get positioned at ridiculously low levels, and the ones who wanted to get in, let's say, well, all of a sudden they have a reason not to sell anymore because they just got in and they got what they hoped for, entry with more money at a low entry with a half a warrant. Then they all of a sudden have very much incentive to see the price go higher, like here. And of course, the longer runway we can have, I mean, if we can stop this front running of a placement happening too soon, that would be even better, more front running. That's why, I mean, look at Goliath, and I talked about this, they had such a long runway because they were not going to raise while they put out news. And you can see what happened then. Good results followed by good results followed by good results, because everybody knew that after these good results, the next material news release is not going to be a placement. And after this good result, the same thing. No, there's not going to be a placement that is next material. As soon as the next news release said that's all the assay results are, night and day. Retrace the whole movement. This just proves my point. So when Goliath had runway, runway where there was no obvious, how to put it, there was threat of, let's say, a surprise to the upside, and they had such, I mean, they had such good holds, which just kept on, gaining momentum. And of course, if they haven't released all the holes yet, there's the threat of the next holes being as good or better. So nobody, I think, dared to, let's say, short it too much into that. But the closer we got to the last holes being in, it started to, I mean, maybe the market sniffed out in a sense that, okay, well, the next news release is going to be the last one, so now it's, okay to start shorting whatever. Boom, next news release gets out. Of course, this was the most remarkable thing I've ever seen, I think. Again, read the news release and see. I mean, it doesn't correspond at all. But this sums it up perfectly. When there is no threat anymore of good return or good results that you could be shorting into, for example, And then, especially if you like the results, you just, okay, now it's more free to short, because if I short, there's not going to be a surprise from any good news releases. And I really want to, let's say, get into Goliath at low prices. I would prefer a warrant. I don't think they actually gave them a warrant. But so what ensued was like a hammering, the likes I've not seen in quite some time. But of course, that was also ridiculous. Like I said at the time, it's absolutely ridiculous. And voila, now it's all of a sudden up. Why? Because fundamentals in the end matter, that this is a really good story. This is a really good project. The same goes for First Nordic. It's the cheapest, probably the cheapest effing gold junior I've ever seen. And I can come up with I can come up with many reasons for that. The latest reason for it is simply, I think, it's people front running a placement. And this too shall obviously pass like it passed here. So if we get even more runway in this case, let's say, okay, they closed that, they started putting out either results. Let's say there's some good results, and one could start to see, it's like, oh, there's probably 1 to 1.5 million ounces here or something. Or I mean, I would hope for even more, of course. I would hope for another Barsele, but let's say 1 to 1.5 million ounces. What would that be worth in this place of Sweden in a hub and spoke model? 500 million plus. That's really material for anybody who was gonna, thought about mining Barsele, because then they would probably mine the Ida deposit, and of course the mill right next door, the Svartliden mill. So if that happens, and let's say the company has 15 million in the till and can start phase 2 shortly after they announced all the results of phase 1, then it's like, okay, we got the results. Let's say the company has whatever 15-14 million left. Like, okay, we have enough for 15-20,000 phase 2 IDA drilling without an obvious placement in between. And yes, they might do the same thing down the line, where it's like if they get down to $5 million, they might raise again, of course, because even if it feels, let's say, bad right now, the other risks are, again, there are a few risks. Let's look at an alternative scenario, just because this is how the market works. Let's say they put out the IDA results, and again, let's say overall it's a successful drill campaign, good drill campaign, but not enough for people to look away from their bias against Sweden, thinking that it's Venezuela or something, which I've seen people actually literally think it's like Venezuela. So I know they're wrong, but if the market believes that, they're gonna discount as they're doing, right? Anyway, so let's say they put out the news release, good results. Let's say it pops a bit, but then after it's popped up a bit, then the PP front runners will be like, okay, now most of the results are out. Now we can start shorting, and then you're even closer to the next placement. So if they could subdue the IDA results, for example, and there's not enough buying power to withstand that, then they can start to weigh on the stock even more again, and then we're at a point where, okay, now we don't have any news assay results coming, not in the short time frame at least, and we're even that much closer to needing to raise money, and this not just wanting to raise money, needing to raise money, and the market knows that. So who knows, this might be the best way to give a clear sky, let's say, for the coming exploration results. Take care of the overhang, cash it up even more with even more runway before the market can even think about starting to front run another placement. And of course, the more you raise, the more potentially good news you can put out before the next race as well. So I mean, in my opinion, I'd like to see them, not raise as much as they can, but raise a lot. From that perspective, I don't care if they're raising at 37 cents or 42 cents or 45. In the grand scheme of things, it's a detail. I didn't get such a big position in First Nordic because I'm sitting there debating if the stock is worth 50 cents or 37 cents. I think this is a multi-dollar type story. I mean, even the take this analyst report, for example, Hannon Partners. Maybe I've shown this before, I'm not 100% sure. I think I talked about this, but it's like they foresee 95% recoveries, 207,000 ounce producer from Barsele, all-in sustaining cost of $1,229 per ounce. Goal is obviously 3,300. Initial capex of 500 for a net asset value of US 1.5 billion. I think that's based on 100%, so that's what. 1 second. 1.2. Yeah, 1.2 divided by 0.7. 1.7 billion CAD. That's net asset value. That's not NPV, that's net asset value. They account for the time of it getting into production, etc. So that's that's 1.7 billion CAD at $2,500 gold, not 3,300. And right now we own 0.45%, so that's $770 million CAD. The current market cap is 100 million. And they also believe it's going to get to 45 million ounce. So imagine what this is worth. Anybody who has a deposit like this, 45 million ounces, 200,000 ounces per year producer with AISC of 1229. And again, they get a NAV of 1.2 US at $2,500 gold. And I looked up what their costs were, or their cost assumptions were. Here you see underground mining costs, ore processing cost, mill feed, G&A, and then AISC. So it's like, I think they somewhat used the ones in the 2019 report, I'm not 100% sure. Okay. And they already say AISC are below the average for the industry that currently stands. Okay, so this is a low cost producer as it is, 200,000 ounces per year, which is basically a tier 2 deposit. Okay. And then look, when I thought about it, it's like, okay, I'm gonna look what operating cost estimates, compare these assumptions to come up with their NAV, come up with their NPV and yada yada. With modern recent advanced studies in the Nordics plus the operating Björkdal mine. This is that comparison when I had ChatGTP. I mean, you will have to, let's say fact check this, for example. But I think this is correct. So this is what they used. This is what Hannon used to come up with their NPV and NAV of 1.1 billion at 2.5. At $2,500 gold. $89 total operating cost. This is Viscaria in northern Sweden. That's a copper underground mine, but we're going to look at what they're expecting to mine as well soon. They assumed to come up with their numbers, which are great, makes Barsele look very undervalued, or First Nordic looks extremely undervalued. They assumed operating cost 3 times as high as Viscaria, and this is a feasibility level study. A real feasibility study for an underground copper project in northern Sweden. This is Björkdal, the operating underground gold mine to the east of Barsele. $40. Ikkari, according to I think it's their PFS, 45. Nordic average 38. And this is the cost that's assumed for Barsele to come up with the economic numbers, and an all-in sustaining cost of 1,229. So when I realized this, I'm sitting there like, holy Christ! I mean, Barsele is much better than I even thought. I didn't realize these are the costs in the Nordics underground. I didn't realize they were that low. And it's not me making it up, that's a feasibility study, that's an operating gold mine, and this is a PFS stage study. They should be much more accurate than an analyst report because this is reality and these are close to reality as far as you can tell from a economic study. And here you have the grades for these different deposits. I use spot gold price, spot copper price, well before the Trump tariffs, to calculate AU equivalent grade in the case of Viscaria. Viscaria is at today's gold and copper prices, around today's gold and copper prices, they are working towards building. I don't think they're in construction yet, but they're basically building underground mine that's going to be mining 1 gram per ton AU equivalent. Björkdal is mining 1.41 or around there. Ikkari 2.35. Borsele has the highest grade of all these deposits. They expect to be making money on this in Viscaria. Björkdal is making money on this. Ikkari should be making money on this. Do you think you're going to make money on this? If you have stopes and zones 10 to 100, 200 meter wide. Of course you're going to, yeah. And with these costs, they get an all-in sustaining cost of $1,229 per ounce. Question is then, what are the actual all-in sustaining costs? How low are they going to be if the actual costs of mining are closer to what this operating mine is mining at, and this feasibility study and this PFS study is estimating for these Nordic underground projects? I don't think there was anything more, really, was there? Oh yeah, no, this is the financing. And it's a half warrant with an accelerator. So if they use the acceleration, if the price goes over $75 over 20 trading days, they can accelerate it. That the warrants gets taken care of in within the next 20 days. And yeah, so I mean, also they have a new deck. And I talked about Ojärvi in the last one, my last K report. I mean, I believe, I do not believe that it's going to get crazier than this in terms of undervaluation. It could happen. I don't think so, because now it's kind of obvious why it was kept at such a ridiculously low price. I think again, just considering I think this is a tier 2 deposit, hands down tier 2 deposit. I think Borsele, if Borsele was in production, it would be worth I don't know, $2 billion. I think. If it was an operating mine, just look at other mines that are worse that have been sold with reserve life of 1.5 million reserves, etc. Higher costs, around the same throughput, and this would be a fresh 45 million ounce Alamos Young Davidson type deposit. So in my mind, this is going to be a $1 billion project. Borsele, we own 45% of it. I don't know who is going to be the one operating it. So I mean, in the meantime, that's the beauty, in a sense. That's why I'm have such a huge position, because I don't see any credible way for me to not make money or I should say, for this company to be trading even cheaper than this for an extended period of time. I think this is hands down one of absolutely ridiculous. And there's a bunch of factors that goes into it. The multi-asset nature, the unresolved ownership, Sweden. So I know all the reasons, like every excuses that people have. It's like I saw someone write on YouTube comment on when I talked about Ojärvi, who said that he got out of First Nordic as soon as he saw realized that Agnico was holding all the cards, as he put it. Note that reason. I got out of First Nordic because I thought Agnico was holding all the cards. Does that relate to anything like price to value, or hey, there's Ojärvi, there's the 100% exploration ground and they have more large scale targets than almost any other gold junior around? No, none of that. Just again, this is what I'm talking about. You take one narrative, it might be Sweden, it might be unresolved ownership structure, it might be pick some, and everybody has their own idea, and that's why the market can typically only focus on one thing at any one point in time. So once someone latches onto that kind of a narrative, they're gonna justify, and of course now that guy is looking smart, right? So it's not like anybody who has that rationale is gonna think, well, okay, maybe that's not the most rational way to go about it. No, because he's looking smart now, right? So I mean, now we're dumb. He's smart for selling because Agnico is sitting on all the cars. I'm of course looking at the underlying value. And to me, it's absolutely ridiculous, the idea that, I mean, imagine if you could see, Warren Buffett, saying no to selling something at whatever PE equivalent of 2 because he thinks, well, it's going to be boring for a while. I can't stand boredom. I can't stand waiting for Agnico what they do with it, even though it's like, oh, okay, this should be a P10. This is a P10 asset, and I'm selling it for P2 because I don't know when I'm gonna get paid, in a sense. That's a luxury problem, to say the least. So that's the things. Like, the main risk I see in First Nordic is boredom, and I cannot I mean, for the time being, I cannot say that about any other gold junior I own. That the biggest risk is boredom. Almost not any gold junior, at least. So yeah, I mean, I think it's super ridiculously cheap. I was able to. I picked up some extra shares in most accounts, most family accounts in. I mean, got in lower than the placement. I think my belief is, since, I mean, it makes sense because it's a large position. I think First Nordic, I believe, is going to be my biggest winner in monetary terms over the coming months and years. That's not a guarantee. If I'm wrong, for whatever reason, and this is worthless, I'm going to lose a lot of money. If I'm right that it is worth a lot more, and sooner or later the market is forced to reflect that in some way, or they have success and prove that this is a more like a 5 to 10 million ounce gold camp instead of just 145 million ounce deposit that they own 45% of, plus you have the, let's say, a spin out potential of Ojärvi, or they start working on Ojärvi, whatever, that's worth something. Then obviously I should be making a lot of money. That's a simple bet. To me, First Nordic is not high risk case. First Nordic is, for a gold junior, I think it's the best combination of. I mean, it's gonna sound weird because, and I'm almost paranoid saying it because it's the junior sector, but to me, First Nordic is a low risk, high reward case. But that, obviously, as we've seen, does not mean that the share price can be effed with, and you have this incredible volatility where it's like not too much changes, but it can't go up, it drops, all of a sudden it can't go down, all of a sudden it can't go up, it drops, That's just the markets for you, in a sense. That's the capital markets. So yeah, I mean, I hope. I mean, I'm seeing some people in the forum who kind of share my sentiment. They realize, of course, nobody probably, unless they have, let's say, more dry powder to pick up, let's say First Nordic, when it's probably is the cheapest it's ever been. then it's obviously very frustrating. But I can see some people who are like, yeah, they quote understand what's happening here, where it's like nothing has really changed. This is just a case that, in my opinion, just got a hell of a lot cheaper. And if we fast forward some months and years, this might look like an incredible bargain. That's what I think. That's what I'm betting for. But as always, this is not investing advice. This is not a buy or sell recommendation. Uh, don't bet money you cannot afford to lose. Of course, I'm super biased because I really want this to be a big fat success. And I am, I put a lot of money in First Nordic, and I think it's the highest weighted junior for the family portfolios as well, or most of them at least. Might be, closely tied with in some portfolios. Uh, so yeah, I mean that's the thing. To me, this is irritating mostly. I'm not worried. It's like somebody asked me today. It's like, are you worried about maybe Barnsley's not as good as it looks like? No, actually, I think Barnsley's better than I even thought it looked, and I already was convinced that Barnsley was a great project. But when you come up with, let's say, economic numbers and stuff and ASIC like this, and that's when you're using 2 to 3 times the average expected mining costs in Sweden, then you're on to probably a absolutely hands down tier 2 deposit. And tier 2 deposits today, operating ones, even old ones that are not actually maybe tier 2 anymore, they sold for like 1.2 billion when gold was at several $100s lower. So yeah, so I think like this was an irritating thing, and this has been an irritating thing. I do think that the actual value of Barsele of First Nordic is multiple higher than 35.5 cents per share. I think with some exploration success, I think it could be. If First Nordic was consolidated, if Barsele was consolidated and they have some exploration success, I think First Nordic could be a multi-billion-dollar story. That's my bet. Of course, if they do that, you have to add dilution. So let's say round up to 200 million. That's still a 5xer to get to 1 billion. And I don't see that as a very high risk, because if they consolidate it, I don't think it's going to be that much of a stretch to get it to $1 billion, especially with some exploration success, because all of a sudden you might quickly be larger than Ikari, and you have many more large-scale targets than Rupert. So that's not a stretch in my opinion. If this turns into a 6 to 10 million ounce plus gold camp, multi-billion-dollar story in my book. But that's the bet. It's not a guarantee, but it's not priced in the slightest either. So that's the thing. If that were to happen, I expect to, if I'm able to hold shares, the shares I'm able to hold all the way up to that potential future, I expect to make hundreds of percent on it. That's it. Again, super biased. Assume I might buy or sell shares at any point in time. So if you think you're my exit liquidity, for example, and you're worried about that and you don't understand the story, absolutely do not buy it. I don't share your profits or your losses. If I make money in First Nordic, your portfolio does not go up. If I lose money in First Nordic, your portfolio does not go down. We're all tied to our own portfolios. I'm just saying this is how I think right now. I think, based on how ridiculous this sector is, I think we're here just what is this? Around let's say a year later. No guarantees. That's what I think. Thanks for listening. Have fun out there. Thanks.